Well, hello there, traders. This is Art Dale for FuturesTradingCompany.net and a recap of our trading for July 2nd, 2012. We had a very good start to the week. We went 7-2-2 today, all during the day session. Had one pre-market trade for 10 points. Everything else was during the actual cash session for a total of plus 82 Dow points. So a very great start to the July 4th week. Going to put the trade sheet up for a few moments here so you can see exactly when we took each trade and what the outcome was. And here's my trade sheet. The one trade that I took pre-market, I only took that with one contract. There were a couple of times today when I only traded one contract, but for the most of the trades were all two. This was a trigger entry pre-market, and the market was really not real strong at that point. I guess it was really never strong during the week. It was more of a trading range day, but I only took that with one contract. We got long at 12.801 and was looking for a 10-point target and was able to get that 12.811, so 10 points on that trade. Want to go over a little bit of a wrinkle that I've added to the stop that we're using that I feel is going to actually increase our overall results. And as you know, I usually start out at least with a catastrophic 15-point trailing stop. That's what I use. And I've been experimenting and using something a little different in order to move my stop up a little quicker. And I want to show you what that is here. And this first trade during the regular session is a good example, and it's actually a mistake I made. My 15-point trailing stop at 12.820 would have been stopped out at 12.805. I actually exited at 8.06, but what had happened, and let me just show you this. What I've been using is a 4-bar stop. So I count the entry bar as the first bar. That's just bar 1. Then 3 more bars need to form. 1, 2, 2, 3. And for a long, I'm bringing my stop up to 1 point below the lowest bar of the 4 bars. So my stop there should have been 12.812, and I just didn't get I just didn't get over to my trading dome in time to get the stop in there. The price was going down, and I was looking at it. I was trying to figure out, okay, where is my stop going to need to be? And then by the time I figured that out, it had already broken through that, and so I got it off minus 10 points. So that was a minus 20-point trade. Would have been a minus 12 points. So that moving my stop up there would have saved me 8 points on that particular entry. But what I'm doing, if I stop myself out that way, and if I don't hit a 15-point pullback, in other words, if this had pulled back to, let's say, 12.806, 1 point below, above what would have been a 15-point stop out there, I will re-enter the trade at 1 tick above the high, in the case of a long, of the lowest bar on the pullback. So had this not pulled back to 805, but to 806, I would have been entering long at 811 for a re-entry. I call that a re-entry trade, and you'll see that show up on my trade sheet with the two letters RE. Let me give you another example of what that new stop has produced here. This is a good example. This was at 8:11 in the morning, and here was I had a trigger right here. This is my trigger bar. This is where we actually got short on this bar, and again, this is a short. What I'm doing is it's a 4-bar stop, so 15-point catastrophic trailing stop, but a 4-bar stop. So this was my entry bar, the second bar, the third bar, and the fourth bar. For a short, I'm bringing my stop to 1 point. Above the highest of those bars, and that was 1 point above this bar. So my stop was 12,736. I was looking at the wrong bar. Here's the bar. That's the entry bar. The high of that bar was 12,733. So I brought my stop to 12,734. One tick above that bar. My entry was 729. We got to a low of 724. If I've been using a 15-point stop, 739 would have been the stop out, and it would have been a 10-point loss instead of a 5-point loss. I've done a tremendous amount of work on this new stop, and it dramatically increases the overall results of our trading, because it really does allow you to limit your losses, and it has been quite a surprise for me. But wanted to go over that new method with you. I've actually been using it for a couple of weeks now. You'll notice on the stops there's a lot of pretty small stop outs. That's one of the things that's helped us increase our ratio of winning trade average to losing trade average, and we're now at about 1.5 times. Our winning trade has been running about 1.5 times our average losing trade, and we're running at about a 69% win ratio. So that is a good recipe for success. So that's the method, and I have a re-entry method that I'm using on this now too, which I'll discuss with you in another video. In fact, I'm going to make a video just relating to the 4-bar stop and the re-entry method if you decide to use it, which I think you'll find very helpful. Have a great evening, everyone. Looking forward to tomorrow. That'll be we'll have one less trading day today. The market will be closed on the 4th. So we trade tomorrow, and then the market will be closed down the following day, and then we have Thursday and Friday. And the big jobs report is out at the end of the week, so it should be some interesting trading. For FuturesTradingCompany.net, this is Art Dill, Trading to Win. Have a good night.